Thoughts on the market's reaction to Election Day. Trading the bigger than expected move. Simplifying your options execution. And what John will be trading post-election. All this today and more on the Futures Radio Show podcast with trader, CEO, and founder of Simpler Trading, John Carter. Futures Radio Show is sponsored by CME Group. They are the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world effectively manage risk. For access to free educational tools and resources for the active individual trader, please visit activetrader.cmegroup.com. For new show notifications, please subscribe to Futures Radio Show podcast on iTunes, YouTube, Google Podcasts, Spotify, or Stitcher. This show is also sponsored by Trading Technologies, RJO Futures, and FTSE Russell. The Russell 2000 is a key benchmark for small-cap U.S. stocks. Be sure to check out the E-mini Russell 2000 futures symbol, RTY, and Micro E-mini Russell 2000 futures symbol, M2K. To learn more about FTSE Russell and their products, please visit FTSERussell.com. John, what's going on?
Hey, Anthony, never a dull moment in this current market. How are you doing?
Doing good, man. You know, what a night with the election. I don't know if I could summarize it in one word as just strange. I don't know.
Yeah, it was interesting because, we actively traded the last election in 2016. And I remember staying up till like 5 in the morning because the moves were amazing. The S&Ps were up at one point like 30 or 40 points. And then they went limit down. And then from there, they bounced and were positive the next day. And, what was interesting about this one is there were so many kind of unknowns. And, the only one trade that made sense to me was that the VIX would revert back to the mean. So that was kind of the trade I did. I watched the election until about 10:30, and then I was tired, and it's like, you know what? I feel comfortable with my trade. I'm going to bed. I have no idea how this is going to turn out. And I was watching the betting sites, and the betting sites at one point were, 80% Trump, and then he fell to like 50%. And then when I woke up, it was like 70% Biden. And then the markets just ripped higher. And, I just think it was a situation where, the markets weren't expecting the election to unfold the way it has, at least as of right now. You and I are talking, nobody really knows what's going to happen, but it's starting to lean a certain way, and it's fascinating. It's just been a fascinating thing to watch and participate in.
Yeah, I want to go back to the one trade that you took because I really only found one real trade that I liked as well, but I want to talk about yours first. You said your trade was for the VIX to revert back to the mean. Talk to us about why that was your trade of choice.
Sure. So the way I looked at this is that I really didn't get a sense of, okay, am I going to buy, futures and hold them overnight, or short futures and hold them overnight? And that sounded horrible. But the idea here is I looked at this election as almost like a run into earnings. And what will happen with the stock is it's going into the event. It's kind of like the implied volatility expands, and then right after the earnings are released, it crashes and reverts back to the mean, kind of where it was before. And so the VIX had run up to about 30 and was up at the upper Bollinger Bands. And then the mean, the average price, was down about 5-6 points below it. And so the one trade to me that made sense is that once the event is done, the VIX is going to revert back to the mean, much like an earnings trade. And so we were able to, and I wasn't brave enough to just short futures and go to bed. So I did do call credit spreads on the VIX, where you're selling, the at the money calls and then buying some protection above it. And that was a nice risk reward ratio. I didn't lose any sleep. And then, the VIX was, was down 5-6 points today. And so that one actually played out pretty clean, but I certainly really didn't know what the indexes were going to do.
So you're flat in that position now.
Yeah. So what we do on something like that is once the event's done, it reverts back to the mean, and then you just close it out. So it's kind of like it's like a quick base hit kind of a trade. And it was just, of all the things I was looking at, it was really the only what I would consider high probability trade that I could see going into the election.
And I know from following you for years that you trade options, you trade futures, you trade individual stocks. You really trade the whole gamut of pretty much everything. And I want to talk about how it really even started for you, because let's face it, it takes a long time to be able to trade all of those different types of markets and to be able to execute all of those markets and strategies with precision in your execution. Take us back to kind of the beginning and how you started as a trader.
Yeah, so it's a good question, and the short version is really I stumbled across it as a senior in high school. My stepfather was a broker; he still is a broker, and I just saw him and some buddies talking about trading one night. They were sitting around the table. I was like on a Sunday, and I heard him mention something about you know earnings and Intel and options, and I had no idea what they were talking about. And this was toward the end of summer, just about to start my senior year of high school. And I had worked all summer schlepping cookie dough at the mall, making $4.25 for each hour that I labored. And so I'd saved up like $1,000. And I just said, is this something that I can participate in? And so they kind of, I kind of like gave them money and they bought options for me, kind of a thing. And a couple weeks later, handed me back my original $1,000 plus $800 in profits. And it just blew my mind that this was possible. And so, for better or worse, that just kind of set me on the journey. And, all through college, all through my initial career out of college, I was really heavy into like Investors Business Daily and, starting with stocks and kind of moving into options. And, a lot of the times I really didn't know what I was doing. But I would, I was willing to take risks, and I'd make a lot of money and then lose it, and I'd make a lot of money and then lose it. And then over time, as I started settling in, I just started experimenting with more instruments, and I got into S&P futures and different futures contracts and trading the ags. And I think, the way to probably summarize my trading philosophy after all this would be to say I look for specific situations where I think that there's going to be kind of a bigger than expected move. And what I mean specifically by that is like what the option market makers have priced in. And so I don't necessarily care if I'm trading futures or stock or options on that stock. It's more about I'm looking for a moment in time where a market has a higher probability than average of having a greater than expected move. And that's kind of what I've gravitated towards. So what's interesting is it'll frustrate some people because I might do, some trades on Tesla, which has been a really good trading vehicle this year. But then if the setups stop, and frankly, since Tesla went 5-for-1, stock split, the setups have stopped. I don't trade it, and it kind of drives people crazy. They're like, "What's your next Tesla trade?" Like, nothing. There's no setup on Tesla. Next, it's time to go find where this setup is gravitating towards.
So in a nutshell, you would say that your strategy is searching out the bigger than expected move.
Yeah, it's one of those things that it's worth the look, and I'm a little impatient. I can't sit on a trade for 6 months or a year to see if it's going to play out. If I go back and I look at charts, there's always those periods of time where you kind of have those more hyperbolic moves, or it's just, it's like, wow, that was a really big move up, or sometimes down. Like, I'm not really concerned if it's an up move or a down move, but I really got into identifying how could I pinpoint the moments in time where the likelihood of one of those bigger than average moves is setting up. And that was kind of the journey that I ended up going on.
What I think is interesting about looking for that bigger than expected move is that you're really not market specific. Not really. You're not at all. I mean, you're saying I'm going to look at multiple markets, whether it's futures markets, whether it's individual stocks, and then you'll use whether it's futures or options or however it is that you feel is best way to execute that bigger than expected move. And that's what you do. So you're not really looking at one or a handful of markets. You're looking at markets.
For sure. There's periods of times where I'll rotate, through different asset classes too. For a while I was, trading gold a lot, and then it just kind of got quiet, and so I moved on, and then more recently got back into it. But it really is just kind of, it's not necessarily I like trading gold. It's I like trading specific situations where this is happening. And sometimes that's going to be in gold, sometimes that's going to be in Tesla, sometimes that's going to be in bonds. What I found is that this volatility kind of rotates from asset class to asset class, and then also too in individual stocks. Of course, there's different stocks of the day where everybody's piling in, or a lot of people are short and they're getting crushed, and that can create opportunities as well.
Yeah, and what's interesting to me about this is that I'm really very different from that. I've been doing this quite a long time myself as well. I started on the trading floor, and I think probably because of my background, I was kind of molded into this, but it actually fits my personality as well. As I only trade 1 to 3 markets, and most of the time I'm focusing just on one market. At least at the beginning of my career, it was only one position on at a time, and I focused solely on futures, solely on outrights. As time has gone by, I have tried to expand to other markets, swing positions, and doing things like of that nature, where I'm getting in a little bit in the longer term. And I think that I know that most people listening to this really can understand the philosophy of searching for that bigger move, but because we all see it with all these different markets. I mean, look at Bitcoin. I mean, look at all of these different markets that have these big moves, and they happen, and you don't have to catch them right as they begin, because they always go a little bit longer and further than most people think, up or down. But easier said than done, right? I want to know your mindset as to how your preparation begins for a strategy like this, to be able to sit there and do your planning. I mean, what are you going through on your screens to make a decision which market could have that bigger than expected move?
Yeah, it's interesting in talking to, especially, for traders that have been doing this for a while. One of the things I've seen, and I resonate with this to an extent, is that you just kind of get to know a couple of markets and a couple of setups really well, and that's
Yes.
your niche, and you
Yep.
end up kind of knowing that, you know it doesn't matter what crude oil is doing. It's like you've got your setup over here, and I like that. It's just I kind of call that's the reliable, like, hey, I want to try to make some income this week. Let's get back into the S&Ps. If there's really nothing else going on. And the pros and cons of my approach are, if you're not careful, what happens is you end up, chasing the latest fad. It's like, oh my God, look at that thing going. I
Yep.
better jump on that train. And it's absolutely not that. What I'm looking for specifically are, if I'm looking at a stock, I typically am looking for stocks that are high beta, so over 1. And then I'm looking for something that, it's had a move. It's proven that it can move, but now it's catching its breath. It needs to kind of, it's almost like an Olympic racer after the 100-yard dash. They don't immediately go run the 200-yard dash. They have to sit down and, rest for a bit. And so I specifically look for stocks or markets that have had a move and are now resting and consolidating. And from a technical perspective, I'm looking at things like the Bollinger Bands. They were wide, and now they've narrowed to a point where they're, trading parallel, and they're trading actually inside of the average true range of the stock. And typically that's a moment where it just can't rest any longer. The volatility can't compress anymore. And it's like it's building up energy, and it just has to release it. And what's nice about it is that it's whatever time frame you want to look at is fine, because once the signal takes place, it typically lasts for about 8 to 10 bars. So a daily signal would last about 8 to 10 days. But if you're scalping on a 1-minute chart, the signal would last about 8 to 10 minutes. And so what I like about it is that you can kind of match your own trading goals and your trading personality with the setup as well. If you don't like to hold overnight, great, you can day trade on smaller time frames. I personally, my sweet spot is a couple of days to a couple of weeks. That's where I like to, try to, find those moves where the juice is kind of worth the squeeze, so to speak. And, plus, when I was younger, I could sit there and day trade the S&Ps all day and, not be exhausted at the end of the day. Now that I'm older, I'm like, let's there's got to be some easier ways to do this. And so I do gravitate more
Yeah.
to some of the swing trades and things like that.
Yeah. There's a lot I want to talk about. A lot of things caught my ear on what you just talked about. And one of those things is just going back to the trader who picks that one market and really gets to know it. I think for someone like myself, at least, when I did that for a period of time, and I did that for a long period of time, 15 plus years before I really started venturing out into starting to do more things. I guess it was really because I was having success at it. I knew no other way, and I'm a routine type person, so I just really stuck with that, and I just tried to refine it and get as good as I could at it. And at some point, like you said, it becomes one of those things where I noticed several years ago where you have a lot of droughts and there's a lot of time where there's a lot of downtime, and and if markets really get slow, you could be going a really long time where there's not really a lot of good action to trade. But I think that's a good fundamental place for traders to start, because now I'm someone who's interested more into what you're doing. And I think that having some background, at least a little bit in trading, starting to look for this, can help you with managing risk, managing the positions, executing these types of things, and having some experience. And I want to talk about how you mentioned Bollinger Bands, because this was super interesting to me, because my strategy is, I talked about how you and I we're different in the fact that how I do my business and how you do yours. But we both use Bollinger Bands. And what I look at is when a Bollinger Band, and I talk about this all the time, when a Bollinger Band is opening wide and it's going in one direction, I only trade that direction. But when I get more active on my day trading is when the Bollinger Bands make the two peaks and they come back down and they start pointing. Then to me, I know that I could manage risk better, because I think that the range is now going to be in. So I could look for a mean reversion trade, or I could look for, trading with the trend. So that's where I've had a majority of my success, is once that Bollinger Band is closed, to be able to trade that specific range. And one of the things I've been working on is trying to get pretty much the opposite of that, of when we do expand into the range, how you trade that. So that brings me to my question for you. You talk about how everybody has seen that Bollinger Band, or when things start to tighten up a little bit. How do you execute that when you start to see that trade, looking for that bigger than expected move starting to happen?
Yeah, and the Bollinger Bands are really a fascinating tool, and I came across them, early in my career, and I found, there was a period of time where I seemed like I was always buying the highs and getting stopped out. And I remember making a comment to someone who's like, dude, you need to throw on the BBs. I'm like, the what? The Bollinger Bands. He's like, you're probably buying right into the Bollinger Band. And I was like, huh? And I put them on, and lo and behold, so it is a fascinating way to kind of establish a range. And so what I specifically look for is there's a couple of tools where earlier we were talking about the VIX and the election and the reversion to the mean. So if I'm looking at a daily chart of let's call it S&P futures or gold or whatever it is, and the moving average that I consider the mean, which is just that average price where it's going to keep coming back and testing it, like gets too far away, runs back home to mama. Whether it's going up or down, it's always going to come back to that 21 period exponential moving average. And so that's what I'll look at there. And so what I like to look for is a moment in time where you've got whether gold, S&Ps, bonds, Tesla, Zoom, where it's had some volatility. Now the Bollinger Bands have compressed. Those two standard deviation Bollinger Bands have compressed, where they're now trading inside of the stock's average true range, the Keltner channels, and just call that a squeeze. And then you're looking at the chart, and price is actually hanging out around that 21 period moving average. And what I like about that is that, assuming we're in an uptrend in this case, is that now you've got, you've flushed out all the people who bought the highs. It's building up energy. It's getting ready to take off. And that to me is the time I like to start building a position. And generally then what happens is that the Bollinger Bands kind of start to turn back out, and they pop through those Keltner channels. you start to get this momentum that just takes off. And what's great about this is that, all, the traders who chase momentum, they get into this, you might get into this on Tuesday, and then the momentum traders don't even know it's alive until Friday, and then they'll run it up for the next couple of days. And so it's this nice thing where you get this really fast action. If you've got a stock or a market that's trending to new highs, that's oftentimes you'll see a break to new highs, maybe a move into a fib extension, and then you hand it off to the people who are chasing it. And it's just a nice rhythm to get into. And it also works for downside trades as well. And then, and if the market is a little unpredictable, I may just drill down to, say, a 30-minute chart and then just be in a trade for maybe, 4 to 6 hours instead of 4 to 6 days. But, it's nice because you can kind of adapt the setup based on how much exposure you want, based on what's going on in the market. Like right now, the markets are kind of unpredictable and crazy because of the election. Great. I'm not going to throw on a bunch of trades based on, daily and weekly trends right now.
Okay. I want to dig a little bit deeper on this. So, and one of your mottos is really simpler trading. That's the name of your company. You founded that company. And to me, it seems pretty simple in your process. So I want to go through a couple of things. One is, what technical indicators are you using? You mentioned Keltner channels, obviously Bollinger Bands. Is there anything else?
Yeah, we do. We definitely do try to keep it simple. The idea of a more complicated trading.com just didn't seem like it it rang a bell. That's easy to do, right?
Yep.
And so it's really just taking two simple concepts. Basically a stock or a market is either always reverting back to the mean, or it's at the mean and it's getting ready to explode or implode away from the mean. And that's it. That's really, and from the way I look at the markets, that's really the only two types of trading. And so it's just identifying, things like, okay, well, how far does a market typically get away from its 21 period moving average before it starts to revert back to the mean? Because that can help us establish targets. That can help us establish option trades to do around those levels. And so that's kind of the first thing. And then the second thing is just, what are actionable signals that we want to take? And so the first one is simply a tool called the squeeze. And that's a combination of the Bollinger Bands and the Keltner channels and momentum. And, just kind of getting a signal that, okay, the energy is building up here. It's time to get in. But then what happens after it fires? Okay, what you need a signal that, okay, it's done and now it's about to revert back to the mean. And so we'll do, we've taken some kind of more advanced tools and thrown them into this tool we call the Ready, Aim, Fire tool. And what's nice about that is it kind of gives you an idea of like, okay, this thing is done going to the upside or done going to the downside, and it's ready to back to the mean. And so that's really, in a nutshell, the trading that we're looking for. It's either, we're sitting there hanging out at the mean and we're about to have an explosive move up or down, potentially, or it's already traveled a long way. And, if you, ideally, you're booking profits into that, and then you're looking for a potential reversion to the mean. And those are the two main things that I'm looking for.
What time frame charts are you looking at on a consistent basis?
So if I do like to look at definitely multiple time frames. If I could only have two time frames, it would be a daily chart and a 30-minute chart. I'll also look at the weekly charts and, like a 2-hour chart as well. But the daily and the 30, they give me a nice, the daily chart's kind of a nice, bigger overview for those multi-week moves, multi-day to multi-week moves. And then the 30-minute chart is kind of good for timing it. It's like, all right, I see that, we have a signal here on the daily. The 30 minutes a little sloppy. Oh, there it goes. It's starting to turn. We can kind of use that for a little bit more precision. Or you could, of course, just trade the 30-minute chart on its own if you're just looking for, I just want to make some rent money today and be flat tonight because, it's been a long week, kind of a thing.
Traders, we're going to pause for 30 seconds and we'll be right back. A question I constantly get is, what platform do I use to trade futures? Well, I use TT. They are the world's fastest commercially available futures trading platform. Learn more at tryttnow.com. RJO is a long-standing brokerage firm with personal broker relationships to help you learn and trade futures. To learn more, please visit rjofutures.com. And I love the way you put that. You're either looking for a trade to revert back to the mean, or you're looking at something that's hanging out around the mean and to explode away from it. And I really look at the market that way as well. I mean, I talked about how I use Bollinger Bands, and I'll share something quick with you and the listeners. I've talked about this before, but what I like to see is when the Bollinger Bands get really wide and you have that big move, once they start to come back in, what I actually did was I tried to figure out when would a market revert back to the mean from that point. You know, as a day trader, I was always getting chopped up trying to pick a top or a bottom when a market was in a one-way move, you know, especially if I missed it overnight. So I was trying to put something in to protect myself from it. And when they make the two peaks, simple rule for me is you take the two peaks once they're there, and I actually use the fib tool. And once it gets and I use an hourly chart, an hourly bar closed above or below the 30% of that move, or 70%, however you want to look at it, then it would revert back to the middle. And I noticed that to be when I could actually trade both sides of the market. And the reason why I even mention that is just because just finding a niche in one of the ways of reverting back to the mean or getting away from it. And you have put together a simple strategy to find a way to look for these bigger than expected moves.
One of the things I've learned over time too is that what's nice is if you have a set of specific rules that defines, you know, entry for explosion away from the mean and entry for reversion to the mean, what really, really helps, and it's so important to have those defined because it prevents you from basically doing anything that's not that. Because the toughest thing I see for newer traders is they get in, you know, they're looking at the markets. They're like, where's the action? Oh my gosh, you know, Zoom's up today. I'm going to buy it. But they could be buying it right at basically at the point where, you know, I'm selling it to them, you know, or, you know, it's just really being careful about not getting caught up in quote unquote, the stock of the day or the market of the day and chasing. And that just, you know, there's a saying, you know, all dogs that chase cars eventually get run over, and it's the same in trading. So it's just so important to have those defined entries, and then just having the discipline saying like, yeah, boy, I really like this stock. I wish I had it. You know, I don't have a signal. And then, you know, literally instead of trading, you know, so then instead of trading stock or trading a market, you're trading a signal. And then it's just getting really honed in on that, and just, you know, just look for the signal. You're not trading a stock. You're, you know, scan for the signal. Or if you're looking at a specific stock, make sure you wait for your criteria to get hit. Otherwise, you know, you're done. You know, your brain's going to, you know, literally you're going to lose your mind, and you're just going to be doing things and chasing and trying to scramble out of stuff that's not working, and it just doesn't work in the long run.
Yeah, I mean, absolutely. I mean, having a criteria in place is pretty much everything, because people always say be patient. Well, you got to know what you're patient for. You know, I'm patient for the look that I know that I want to see. And
yeah, good point.
And, you know, I talked about how I like that 30% line revert back, and then basically exactly halfway in between those two Bollinger Band peaks is where basically I would be getting out of that revert back to the mean trade, and then I think it's two-way market, then maybe I go to a lower time frame. Well, the reason I'm even mentioning that is because I know where I would potentially want to get in, and then I know where I want to get out, and I would also know where I would want to manage risk. And once that 30% line was drawn, I would just basically be risking above that high or that low. But what I want to ask you next is, I understand the thought process on getting in, but this is where I struggle, is when I try to do the trades away from the mean, and it's just my personality, but I struggle with like how I feel like they take longer to set up, and I'm waiting for that to eventually happen. And a lot of times I'll get maybe, you know, ticked out before it eventually goes. So I don't have an exact way to manage the risk to stay in that trade. So where are you working your stop, or how would you manage that risk as you're building your position? And then ultimately, when it finally does that bigger than expected move, what's that trigger to get you out? Do you have preset offers or bids? How does that work?
Yeah, so you hit the nail on the head there in terms of, you know, the reversion to the mean trades are nice because you can kind of see them developing, and then they kind of work out quickly. When you're at the mean, you don't really know when it's going to get going. And
Exactly.
if you wait until it gets going, a lot of times, you end up chasing. And so
Yep.
there's a couple of things that I'll do. One is I certainly am a big fan of kind of scaling in. So let's, especially on a daily chart. So you're hanging out, you're at the mean, and let's say you want to build up a 10, 10 call options. So, start with 2. And then if the next day, it moves down and, you're not freaking out, you're not panicking. It's like, okay, great, I'm going to get 2 more. And then you just kind of define like, what is it supposed to look like while it's building up energy? And typically what I'm looking for there is that the moving averages are all kind of staying stacked positive, meaning that the 8's staying on top of the 21, which is on top of the 34, which is on top of the 55. None of the moving averages are crossing, prices staying above the 34, and there's this kind of chop range. So there's that dance of trying to kind of ease into it, but then once you're in, all right, how long do you wait? What's the signal that this is going to go, or what's the signal to get out? Well, if you're trading options, the main thing is if you're buying calls, especially, don't set yourself up for failure by, buying calls that expire in 3 days or buying calls that are way out of the money. I mean, you're just going to lose anyway. So you got to take that into account. Give yourself the gift of time. Go out 30 days, 60 days, go in the money. So you're not getting killed on theta decay. And on futures, of course, it's more, all right, I'm going to give this 10, 12, 15 points, if it's like the S&Ps or whatever it is you're trading. So what will happen sometimes is that you get in and you just get stopped out. It's like, oh, man. But then you got to ask yourself, is the setup still valid, yes or no? Are the moving averages still stacked positive? Is price still, above the 34? Yes. Are the Bollinger Bands still inside the Keltner channels? Yes. All right, let's try this again. So that part can be, to put it lightly, an exercise in patience. So what I like to look for is that, usually when it's going to get going, if you're a fan of candlesticks, you're going to get that nice combination, a little bit of a volume spike, that nice kind of a solid closing candle, and that's generally what's going to kick it off. So that's so you can wait for that. I try to sneak in before then, but that obviously has risks. But that's what you're looking for. You need to get that volume picking up, because the whole idea of consolidation is that low volume, low volume, low volume. But then you just kind of see one day that it's like, all right, the funds or whoever is moving back in, and that's I would guess that the art of that setup is just the ability to have the the position size correct and the patience to kind of wait for that. Or, you kind of get in a half position and, wait for that confirming candle, that confirming volume, and then, and then get the other half in.
You mentioned art. I mean, how much of trading do you think is art versus, I don't want to say science, because I want to say art versus the actual technical and statistical side of things?
Yeah, it's, and I think the art part is more just it's almost like, I mean, I'm not a musician, but I've heard the term, musicians say sometimes it's like reading the markets. Or the best analogy I can give is that I like to body surf, in the ocean. So it is a little bit of body surfing where you're kind of judging the wave. You're looking at the wave come in. Is this one I can catch? Is this the one that's going to take me to shore? And so there's a little bit of, if you've got 10 setups, why do you pick these 2 over the other 8? And I think that's the part where, yes, you can have specific scans that are going to bring up trades for you, and then from there you just got to decide, like, okay, over time, what are the ones that have worked the best? Now, what I have found with stocks is that the most liquid stocks are generally the biggest pains, because they just don't move very much. Like Bank of America, super liquid stock, and it's like, oh great, it moved 20 cents. Versus, say, Chipotle's, which may only trade a couple 100,000 shares a day, but can move $60 or $70 in a day. So I have found that a combination of, say, a higher beta stock and lower volume, believe it or not, actually works pretty good. Now, for an index, like the futures, you're not gonna be looking necessarily for the same parabolic moves all the time. But it is more like, okay, it's consolidating. Are we going to get a 1 or 2 or 3% move, this week? And then, if so, what are our targets? And for targets, upper Bollinger Bands, for bullish moves are solid targets. I'm a big fan of Fibonacci extensions. So, you got the like the 1272 extension of the prior high. That to me has been a very, very solid and high probability target. And sometimes from there, it could keep on going to the 1618 extension. So I'm a fan of scaling out, trailing up your stop and seeing if it can get up there as well.
Oh, that's what I was going to ask you next is, are you trailing stops? Because when you get something that goes, like for me, some swing positions this year in the NASDAQ, it's like, I had some targets that I was really set on covering. And the minute they got near there, I take a portion of the position off, work a trailed stop. They still got me out there, but they ended up going further anyway. But that's a whole other conversation. But I try to hold them when they get there because sometimes, certain markets, certain personalities in these markets, specifically the NASDAQ, the one that I trade, can just really excel beyond them. And so you do scale out and you're trailing stops. Do you have like a specific way that you scale stops?
Yeah, I'm a huge fan of scaling in and out because you're never going to get the perfect entry and you're never going to get the perfect exit.
Never.
And my pet peeve is that a lot of books or beginning books are always say you risk 1 to make 3, and you're going to have your stop and your target, and that's it. You're done. Don't make any adjustments. And the market changes every day. And so what I like to look at is I'm a huge fan of average shoe ranges. So, as an example, the average shoe range of say the S&Ps, could be 20 points a day. It's obviously going to change based on the volatility. And so if I'm in a trade and say I've got 3 contracts, I'm trading off the daily charts, I expect to be in the trade, maybe 5 or 6 days. Well, if I get a 20-point move and it's moved, that's the average shoe range that it typically moves. That's a good place to take one off and then trail up your stop. And I typically will then trail it by average true range times 2. So let's say you start off with, you're in at 3,000, your target's 30.20, and your initial stop is 20 points below your entry. Great, you hit that first target and then trail up your stop to your entry. And then if you hit that second target, so I'm a big fan of just average true range as a guide for targets and trailing stops.
How do you do that when you have options positions on?
Oh yeah, good question. So two things I do is, one, first, to make it easy to see visually, I put Keltner channels on my chart 3 times. So I will have, and I do them as 21 period exponential moving average, and then I'll do 1 ATR, based on 14 days, 2 ATR, and then 3 ATR. So now visually I can see the mean, which is the 21 period EMA, and then I can see 3 ATRs above it and 3 ATRs below it. So that's visually I can see now, like, okay, where do I trail my stop, and where's my targets and all of that kind of stuff. So for options, it depends, of course, what I'm doing. If I'm trading a directional option, say I'm along a call, then if the stock gets to that 1 ATR level, then I just exit the call, whatever the price is. So I'm not so concerned that, the call needs to get to 24 or whatever price. It's like the stock is at its target. What's the option trading at? And so that's where you got to understand options in terms of making sure you're going to get an option that's not going to like die a premium decay death. If you buy one that's far out of the money, the stock could get to your target and you're down money if you buy the wrong option. So that's something to consider. If you're selling premium, say I'm bullish and I sell a put credit spread, it's not nearly as critical. Like, it's at 1 ATR. Awesome. Okay, so do you need to get out of the put credit spread? Not really, because it's not so dependent on direction. But that might be something where, if the put credit spread gets back to, if you sold it for $3 and it gets back to 3, do you consider getting out of it? But, the longer you trade options, the more you appreciate if you're bullish and you sell a put credit spread, or you're bearish and you sell a call credit spread, just how forgiving those positions are compared to if you're doing it directionally.
As someone who really has tried to learn more about options to be a trader, I mean, I understand the basics of options, but to trade them, the more I look at it, it really is an art to it, even though the guys that I will talk to about it will say, no, there's just, they look at their sheets. I actually started in the options pit and wish I would have spent a lot more time there, but it's just one of those things where I feel like correct me if I'm wrong, or however you think about this, is that when it comes to options, it's more than just it's picking the spread on the right months. If you're going to do a call spread or a put spread or whatever, a strangle, a straddle, there's just so much thought that goes into it. And I guess there's a lot of ways you could go about trading a single idea. That's one thing that I struggle with is just, okay, instead of just buying or selling the option, there's just so many other ways to achieve what I want at the best risk way for profit potential. It's just
Yeah,
like,
for sure.
it's like I'm sitting there going, okay, well, it's like the more I grow and learn about options, I'm still ended up calling my really good options friends and say, what do I do? Just tell me.
Well, you bring up a good point, and here's the thing I've learned in options trading is that just because you can do something does not mean in any way, shape, or form that you should. And so
Exactly.
I have found there's three things to do with options. Like this is my bread and butter, and 90% of the time, if I'm doing options, this is what I'm doing. Let's say I'm bullish. Okay, great. I could buy. It's a daily chart, and I'm bullish. Great. I'm gonna buy an in the money Delta 70 call 30 days out. Done. That's the riskiest trade at the most potential for reward, but you've also got the most risk because you got that depreciating asset thing going. The second thing from there is to sell an at the money put credit spread. So what's nice about that is that here's the crazy thing about options. Everybody gets caught up in the call options. Like, man, if I buy it at 5 and it goes to 10 and I get 10 contracts, I'm going to make $5,000. Ask yourself, is there an easier way to make $5,000 on this trade? And the answer is yes. Instead of buying 10 calls, sell 30 at the money put credit spreads for, I'm doing the math in my head, for about $1.75. And guess what? If your stock goes up, you make the same amount of money had you had the 10 calls. But more importantly, if the stock goes sideways and does nothing, you still make the same amount of money as if you had 10 calls. Now, of course, if the stock goes down, you're going to lose money on both, but the risk is exactly the same. And once people understand that, I've talked to people about that, especially if they're newer, they stop buying calls and they stop buying puts. They will just do that. And it's just, if you're trading options and you're struggling with your equity curve, that's the one tip I can say has changed more people's consistency and trading confidence than anything else if you're into options. A mistake I'll see a lot of people make is that, well, if you do 2 standard deviations, you're going to win 94% of the time. Yeah, but that one time it doesn't work. You just wiped out all 19 of your last trades. And so you don't want to do that either. But to me, that's kind of the holy grail of options trading is, hey, you're bullish, selling at the money put credit spread, make the position size, the same size, as if you had bought some calls. And guess what? You just took so much pressure off. You gave yourself higher probability of success. The stock doesn't have to reach your target for you to make the same amount of money. And so it's a pretty amazing thing once it sinks in.
Yeah, like I said, for me, just hearing that from you, I appreciate you sharing that with us. It's just as like with options, I've learned that you need to, there's so much more time I think you need to spend with them, obviously, than outrights. It's Captain Obvious here. I'm saying that, but my point is just you really need to know those types of things in order for you to be able to really give yourself the true shot at being that everyday or that active options trader. I use options only in specific instances. I know my strengths are definitely more in the outrights. It's what I focus on, but there are a lot of times, and each year goes by, I've been using options more and more, and I'm getting more and more used to them. But even with my experience on just trading the outrights, I know that I need to spend a lot more time. And because in the moment, I look at trading a lot as like in the heat of the moment, when all of a sudden I have this trade idea that everything is coming into play, I don't want to spend so much time thinking about how I'm going to execute it. And that's a lot of times why I go back to just the futures or the outrights, however I do it, because it's one of those things where I feel that it has to be instinctual for you once you know what you're looking at on that stock or that future and you're going to go to the options market. Know what or how you want to execute it and know the different ways to get the best way out of it. So I just think experience is just so important in that aspect. And so thank you for sharing that tip with us. I'm going to ask you to share one final thing with us before we go into rapid fire, and that is we pretty much know, I think we all know at this point who won the election. I mean, you and I are recording. We're actually futures are just opening right now at 6:00 on November 4th. And it appears as though that Biden is going to win. I think even if it gets extended now, who knows? But my point, the reason I'm even mentioning that is that we talked a lot today about what the next big trade is. You talked about your VIX trade coming into the election. What are you looking at now? Anything that you could share with us as to what you think the next bigger than expected move could be?
For sure. And just stepping back just a moment on the options, when you were talking, it made me think too. And I think where a lot of people get wrapped up in options, especially if you're reading through the books, there's all kinds of strategies they'll talk about. Oh, you could do the butterfly, you could do the long straddle, you could do this, you could do the strangle. If you're a directional trader, you don't need to do all that. So I think that's, it's important to, I think, understand trading options is like, look, you don't need to even, and I know experienced options traders are going to not agree with what I'm about to say, and I understand, believe me. You don't need to know the Greeks or anything like that. If you're a directional trader and you don't want to buy calls because it's not working, just sell a put credit spread, boom, you're done. So anyway, just kind of, just keeping it simple, so to speak. So, okay, so the election, right? So as you and I are talking, it's the 4th, November 4th, Wednesday. It's 5:00 in the afternoon Central Time, and it appears right now from looking at some of the betting sites that we're going to get a situation where Biden squeaks by. And of course, I'm not a pollster. Friday, this could be totally different. Yeah. Where Biden, barely wins the presidency, but the curveball is that it's not a blue wave. Republicans maintain control of the Senate. They've actually picked up seats in the House. And, basically we get a situation where there's a stalemate, so to speak, or there's gridlock, and the stock market likes that. So could that change? Absolutely. So, I think right now in terms of expected moves, what are some things to kind of be careful of, or it's in something like this is I personally don't like to make what I call, casino bets. Like, well, let's see what happens here. So is the market going to explode higher from here? Is the NASDAQ going to be down 500 points tomorrow? And, I'm the first one to say, I have no idea. But of course, as a trader, I want to look for opportunities to make money. And so when I look at the current landscape and say, what do we have for over the next year? I think some easy trades are going to be things like, wow, they're going to do anything that they can to save the economy. So we're going to continue to see more stimulus. They're going to continue to expand the balance sheet. So what makes sense in that situation? Okay, well, bonds going higher, gold going higher, Bitcoin going higher. And so I think there's some longer term plays here that I don't know if they're necessarily obvious, but I think they're going to set up for nice, relaxing trades. And, the wild card is going to be, okay, well, what happens if Trump gets very upset and, won't concede the election? Honestly, I think that's all news hype. I mean, at the end of the day, if legally Joe Biden wins, he is going to be out of office, whatever the day it is, January 20th, whatever he says about it. And I'm not, my politics are kind of, fiscally probably more Republican, socially more Democrat, but my main politics are leave me the hell alone. And so I think the idea that we're, getting into gridlock here could be a very good thing for the stock market. And, we continue buying the dips until it stops working.
I agree with that thesis because we have the scenario in front of us is we have a blue president and a blue Congress, and we have a red Senate. Stimulus is coming, like you just said, all those things you said. The market spoke today, and in the back of my mind, that's just all I could think about. I think most traders, we watch this stuff, we're all looking at the same things, and we all kind of see that that's what it's setting up to be. Once again, that could change, no doubt about it. A lot could change. This is 2020, man. Who knows what could change? But yeah, no. Once again, it's stay tuned because this year has been. as I started off the show today, strange, weird. I don't even know, like that election last night, just even watching it. I mean, I didn't really do anything, did very little compared to what I did in the last one, obviously because of price opportunity was different this time around. But even when things came out today, as I was watching, it just felt like the tape was just going, didn't really care. But anyway.
I mean, I remember specifically the 2016 election and how insane the markets were and the huge opportunities. And yeah, it just didn't happen this time. I mean, yes, now today we wake up and the NASDAQ was up 400, but if you were trading the election last time, it was like everything was, it was up, it was down, and we're talking huge moves. I mean, I remember trading the Nikkei and the S&Ps and the NASDAQ, and it was just, a trader's dream. And yeah, this time around it was kind of like, okay, let's see what happens tomorrow.
Yeah, exactly. I mean, I shorted the 10-year a little bit on a rally up. It got to an area where I'm like, I can't even believe we were here. And I was just looking for, a quick scalp off of it. But at the time I was clicking out for just a much bigger loss than I wanted at the time. I'm like, I didn't even have time to put my stop in. I just had clicked in and clicked out. And so, like you said, there's just so much going on. Yeah, I know. Believe me, I get it. I started off that night getting beat up and turned it around. It took a little while, but it's just like I said, this election, I just felt like you even go back to from that last one, I learned so much about trading that type of an event again. I mean, we've all been through, you and I have traded a lot of events over the year, but it's like as each one goes by, you just tend to get smarter, right? It's like, I'm not going to jump on this time, jump on that last time. I think last time was just so much shock that the way things are moving. Like I remember going back to that 10-year trade, I'm going like, why are the rates moving this much? I'm looking going, this doesn't make sense. And this is crazy not to step in here. But anyway, I got rapid fire questions next if you're ready for those.
Let's dive in.
All right, everybody. Our rapid fire segment is sponsored by Trading Technologies. Trade the global markets with TT. They are the world's fastest commercially available futures trading platform. Now with integrated tools for advanced options trading, cryptocurrencies, and trade surveillance. Learn more at tryttnow.com. John, first question for you. What trader has influenced your life the most and why?
Wow, it's a tough question to answer because I remember just, over the years of read a lot of books and encountered a lot of traders. I spent some time kind of working with Peter Borish, who was the head trader with Paul Tudor Jones. He ended up writing the foreword for my book, Mastering the Trade, and he really taught me some cool stuff. But I would say that the person that had the most impact on my trading was Mark Douglas. And in the 90s, I had this disaster trade where I blew out my account for the third and final time. And it's a story I talk about in the book about I was trying to get a down payment for my house and, was trying to do a big trade to get the down payment and ended up blowing up the whole account. It was just a nightmare. And it forced me to take a break in trading. And I came across this book, The Disciplined Trader. It was recommended by a broker friend and then later Trading in the Zone. And they really just opened my eyes to the idea of, wow, Nancy Reagan always had the ads of this is your brain and this is your brain on drugs. Mark Douglas was this is your brain on trading. And so those books really changed my trading trajectory. And he ended up being a coach for me. We were talking literally right up to a couple of weeks before his passing, which was totally unexpected. And but I would say that was probably the biggest impact on me. And he really just kind of showed me, how the markets prey on any human being that has stored trauma from childhood and uses that against them. And so if you don't know that, it's a trading weakness. If you do know it, you can resolve it and, go forward with a clean slate.
What was one of the hardest things for you to overcome in trading?
Hardest thing for me was what I would just simply call upper limit problems. So upper limit problem is, mentally dealing with money limits. And over my trading career, I know I've hit many ceilings where, I was growing my account, and I'd get to a level, and then for some reason I would give money back, and I'd get back to that level, and then I'd start giving money back. And it took me a little while to figure out. Psychologically, I think it was just based on my self-image of what I thought I was worth at the time, dollar-wise. And so when I figured that out as a workaround, what I would do is just say like, okay, let's say the level is $100,000, and I'd have my futures account, and I'd start at $75,000, and when I'd get to $100,000, instead of watching it go back to 75, I would just wire out $25,000. And then I'd be back at 75, and I'd run it up to 100, and then I'd wire it out, and I'd be back at 75. And that really helped me work through that. And then over time, I could just increase that upper level. And so as the years have gone by, my upper limit has also gone up. But that's, what I use to identify it is when I hit a double top in my equity. So, you hit a price level in your equity, it comes down, you hit it again, and instead of breaking through it, wow, I just lost money again. And that's how you identify it.
What is one attribute that you believe every trader should have?
Patience. So traders are not born with the patience gene, and the long-term trend of impatience is account destruction. Impatience causes people to make bad decisions. Impatience drives somebody to do things when there's no need to do anything. So it's just that, and also a fear of the unknown. So if we're focusing on fear, we freeze. Instead, just focus on the risk. The risk of the unknown is easy to quantify. You just, position size correctly and then move forward from there.
How has your trading process evolved over the years?
So I've tweaked trading to fit my lifestyle for sure. When I was in my 20s, I was definitely day trading more, trading overnight. I wanted to catch every move. As I've gotten older, you get married, you have kids, and it's just not something that I want to do. I don't want to be exhausted at the end of the day if I'm going to go hang out with my kids. And so I figure out the kind of life I want, and then I find setups to match that. So I don't look at 5-minute charts. I look at 30-minute charts and daily charts. I don't want to put on trades that require a lot of babysitting. If I'm going to put on some bigger trades, I'm going to limit it to a couple days a month, and not be doing that all month where I'm completely absorbed in the process. So that's what I try to do, is just figure out, like, all right, how do I want my next 30 days to look like from a life perspective? And then I go back and I fill in the kind of trading strategies that will work best with that life.
What's the best piece of advice you received about trading?
Oh boy, I think it comes down to just thinking of your positions as employees. So if you had a car wash and you had 10 employees and you're paying them to do a job, 2 of them are in the corner smoking weed. So do you give them a raise or do you get rid of them, right? A lot of times in trading, if we have a position that's not working for us, we add to it. Get rid of it, okay? It's stealing money from you. Treat it like an employee that's not doing their job. Fire fast and fire often, and do it relentlessly and ruthlessly.
Favorite book about trading?
My favorite book about trading, the one that stands out is How I Made $2 Million in the Stock Market by Nicholas Darvis. And, I've definitely read a lot of books on trading, and there's a lot of good information out there. But that one really sat home with me, just the idea of, get your setup and then get out of the way. And it's how staring at charts actually screws up most setups. It develops impatience and stuff like that. And it really hit home the idea of, get your position on, identify your setup and leave. Let the market do its thing. Don't mess with it. And it really helped.
If you could go back in time and give the younger you a piece of advice about trading, what would it be?
So younger self, it would be to, take a deep breath. The markets aren't going anywhere, and think in terms of compound interest instead of like big home runs. So, like the financial advisors will always say, oh, the magic of compound interest. And if you make 1%, 1% a year these days, if that, over, 3,000 years, you'll be a trillionaire. Like, okay, well, last I checked, I'm not going to be living 3,000 years. So instead of 1% interest a year, what if you could compound your gains at 1% a week, every week for 52 weeks? That is not unreasonable at all with trading, as long as you've got strategies and as long as you don't take any big losses. So you think of it like that. At the end of the year, your account is going to grow significantly.
If you had to pick a profession other than trading, what would it be?
Boy, I would say, as a kid and in high school, I loved playing baseball. So I would say if I could snap my fingers and have any career other than trading, it would be professional baseball player.
Last question for today, John. What's your favorite thing to do when you're not trading?
So I do like just getting outdoors, hiking, reading, traveling, spending time with my wife and kids. It was interesting, yesterday, while the election was going on, we've been doing horse riding lessons. We have a place out in the country where we've got weird animals like zebras and stuff like that. And we've been doing horse riding lessons. And what's great is when you're riding a horse, you 100% have to be focused in the moment, or the horse will pick up on your agitation and it will give you a bad ride. So, what I like about that, especially at the end of the trading days, you go out and you get on a 1,500-pound animal. It forces you to get present, to let go of the day, and to have a good ride with that horse, because you don't want to upset a 1,500-pound animal. And I found that that's a really great way to kind of end the trading day.
Well, that's why I like golf so much, because when I go out and play golf, it's if something else is on my mind, then I can't hit the ball. If I can go out and just be clear in my head, I can play well. If I'm thinking about something else, I don't care how much practice I put in. If I'm not in that moment of hitting that ball, I stink. That's just it.
I wish golf was relaxing for me. I've tried it. I'm just like, why would anybody do this on purpose?
And I love it. It's what I do the most of. Well, you know what? We didn't even get into talking about all the animals and stuff that you have out there, so we'll have to do that at a different day. And I know when I talked to you on the phone last time, I was like, man, I got to ask you about this big. And I said, what is it? It's like a ranch, or it's a mini zoo?
Yeah, we did end up, we're in Austin, Texas, and gosh, like 10, 12 years ago, we'd bought this little 10-acre place out in Wimberley, which is about 45 miles outside of Austin. And over the years, our neighbors, were like, anytime they would sell, they always let the neighbors know. And so over the years, we put together a 100-acre place, and it's amazing. There's ponds, there's hills, you can go hiking, and so I just thought, before Corona, we had taken the kids to Africa like 4 times, and we loved it. And I was sitting there, we're trapped, of course, once Corona hit, we just moved out to the ranch full time. And I just thought, wouldn't it be cool? Because South Africa is a lot like Texas, the hill country in Texas. In fact, the climates are almost identical. It's just opposite times of the year. I was like, wouldn't it be cool just to wake up in the morning and see some zebra and wildebeests? And so I went online, and by God, guess what you can buy in Texas? Zebra and wildebeest. I added them to the cart and, got them, and they started showing up. And yeah, it's been an adventure, a comedy of errors for sure. But it's been fun.
Oh, we're definitely going to talk about that next time we have you on the podcast. John, where can people find you on Twitter, and give us a website to check out?
Sure. So for my Twitter handle is just at John F. Carter. And then, I'll post, definitely like to post some market commentary and things like that on there. And then, our main company or website is Simpler Trading, simplertrading.com. And we've got a group of us, a dozen traders that, we all do kind of different things, but we have different memberships where we're, in a room together all day. We're talking about trading. It's a really, really great community. We will send out specific trade alerts and things like that. And so it's a good thing for, good way for people to kick the tires and see if it's something that they like. But, we like trading. I like hanging out with traders, and can't think of anything else I'd rather be doing.
Yeah, I mean, everybody definitely go and follow John on Twitter and check out Simpler Trading. Love your crew over there, specifically Raggi. She's my buddy.
Oh, Raggi's awesome.
Yeah, she's great. Amazing. She's one of my favorite people. Raggi, if you're listening, I hope you're doing well. And, John, what can I say? I got to tell you what, I learned a lot today. I learned a lot about your process, helping me open my mind to, I'm going to be thinking about that Bollinger Band when it's getting away from the mean, and how I can get better at that trade. And thank you for sharing with everybody how, some simple ways to go about using options. So what can I say? I just really appreciate it. And thank you very much for joining me on Futures Radio Show.
Oh, for sure. It was fun. It's always fun talking to other traders. I'm going to check out those 30% retracements you were talking about on the Bollinger Bands. It's always good to learn something new. So it was good stuff. Thanks for having me.
Thank you for listening to Futures Radio Show. If you enjoyed the show, please leave a review on iTunes. You can listen to all of our episodes on futuresradioshow.com, iTunes, YouTube, Google Podcasts, Spotify, and Stitcher.